Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, in this video, we will just dubiously speculate about various scenarios and what certain things could lead to those scenarios playing out. I'd like to remind people, no one has a crystal ball, right? No one knows what's going to happen. It's all just sort of a guessing game that we try to figure out. We try to put the pieces of the puzzle together. And the reason we talk about multiple outcomes is because it's sort of an admission to ourselves that no one actually knows what's going to happen. And so why not consider a couple of different outcomes, as well as sort of reflect on the idea that markets change based on new information, right? New information. And so the future is unknown. And we will, of course, go into it together. So let's go ahead and sort of talk about what's going on right now with Bitcoin. So we have gotten back above 100K. Okay. So what essentially has happened so far is a very common pattern that Bitcoin has sort of gone through. And it's basically, you set these lows and then it just kind of bounces along those lows for a while. The same exact thing actually happened last year around this time, right? I mean, this low was sort of set in early December, and we swept that low in late January, but we just kind of kept bouncing off of that low. We even had a bounce off of this low in early January, right there. This time we got a bounce starting in late December. But again, the low, the zone for where this low was really established like late November or so. So again, this is a pattern that we've seen before. And so, essentially what happened last year at this time, we're going to look at this in a few different ways, okay? If we take the time component and say, forget the pattern, right? Forget the actual pattern that occurred. Let's just go with the time component and say, well, it's January. What happened last January? Well, what happened last January was, first of all, going into November, Bitcoin rallied in November and stalled out in December. Same thing over here, right? It rallied in November and stalled out in December. And then it kind of just chopped around for a while. And then in early to mid-January, there was a rally by Bitcoin up here. And you could argue from a time-based perspective, maybe that's exactly what's happening right now, right? You can see that Bitcoin rallied into, January, like sort of mid-January or so. So that's one way to look at it, right? Maybe it's just repeating that. And if it does repeat that, then let's see how high could it theoretically go, right? I mean, if it, back over here from the early December top, it went about 9 or 10% higher, okay? So if you were to take, this December top, or I guess this one was even higher right here that we just put in a few days ago. But if you just take kind of like this one right here, 10% higher gets you to 10, basically the prior high. Now, if you actually take the prior high and go 10% above that, then of course that gets you to around 120K. That would essentially be like repeating this pattern, right? Where it basically just tags this trend line again. And you can see that actually by the inauguration, January 20th, it would correspond to approximately $120,000. So that's obviously, the more optimistic way to look at it. And remember, if it were to do that, though, that's actually deviating from what it did over here. Because over here, it topped out sort of early to mid-January, like January 10th or so. And then came back down in late January and then swept all of these prior lows, right? So it actually swept these lows that had been holding as support throughout December and January. So if it is to go up into later January, that would actually be deviating from what happened over here. And so then it raises the question, well, is it the same thing? Because one way to look at this pattern right here is to say, well, what if it's, what if we've already had this drop, right? Like, what if this drop has already occurred and it's just a tempered version of last year? Which is a possibility. But again, and I've mentioned this a few times, Bitcoin did something different this December than it has done in, at least the last few Decembers that we've had in halving years. For instance, this December, Bitcoin was actually red in December, right? It was actually red. And in December 2020, Bitcoin was not red, right? It was very much green. In December of 2016, it was not red. It was green, right? Bitcoin went up 30% in December of 2016. In December of 2020, it went up 47%. But in December of 2024, it actually dropped 3%. So it's not exactly the same setup. Maybe if we check December of 2012, it was also green. So this is actually the first December of a halving year that we had that was actually red for Bitcoin. So one of the things that I've mentioned before is some of the times you'll actually get a correction in January of the post-halving year. The last two cycles, we had a correction in January of 2017 and January of 2021. Now, you don't actually have to get that this time. Every cycle will be slightly different. If you look at 2021, there was a 30% drop. And if you look at 2017, there was a 30% drop. But those 30% drops came after rallies in December. And so I guess the question is, well, did we just sort of front run that correction? But I guess the counterpoint is that this was only a 15% drop, not a 30% drop. So if it were to play out like 2023, just from the time-based perspective, right, just from like sort of like the same type of pattern, then you could see it, go up, come back down, sort of sweep the lows, and then try to pick back up in February. That's essentially what it did last year. But here's the thing, right? I mean, every cycle is going to be somewhat different. And I don't remember that many people last year that were calling for this move, right? If you follow this channel, we said over and over again that 73K would likely be a mid-cycle top that would probably hold as the top for about 6 to 9 months. Definitely was not a popular view when I said it. Now everyone who sort of fought against it acts as if it was the most obvious outcome all along, even though that's not what they were saying back then. But what caused this drop, right? What actually caused that drop? I think, first of all, what I truly think is that narrative follows price, not the other way around, right? Narrative follows price. Show me the price. We can come up with a narrative to support it, okay? For instance, if the price of Bitcoin had gone up over here, it would have been easy to find a narrative to support that as well. But we did follow this quite closely. And one of the things that is important this week is that we actually have a lot of labor market data coming in. So the outcome in the short term over whether Bitcoin, say, rallies into the inauguration or dumps into January 20th, because last year it dumped into late January. But if you look at like what the QQQ did when it launched, it rallied hard 54, up until 54 weeks after the spot ETF launch, which this would be January 20th, the inauguration day. So I would say this. If first of all, I have to at least try to show you why this could be important. And that's to show the unemployment rate on this chart. Now, if you show the unemployment rate on this chart, I think it kind of helps sort of visualize what's really happening and how the market is reacting. The reason we show this is because the market needs a reason to go down, not a reason to go up. What I mean by that is markets generally go higher just because people like you and me DCA what we want to DCA into, right? And there's money printing, of course. And so in general, markets trend higher. So the market doesn't need a reason to go up. It just goes up. The market needs a reason to go down. And when you look at the chart, there's two main reasons that we talk about. There's a third, but the third is completely, not even worth focusing on too much because I feel like it's too difficult to follow for me. So you have geopolitical risk, which is just something I think you have to toss aside because, who the hell can predict that? The second is inflation. The third is the labor market, right? As long as you're in sort of this zone where inflation is low and the unemployment rate is low, then the market climbs the wall of worry. We've been talking about this for the last couple of years. What I think happened over here, again, narrative follows price. We called for the mid-cycle top right there before we saw this, before we knew this was going to happen. But when you look at it in history, what you'll see is that as the unemployment rate went up every month without a breather, Bitcoin was in fact going down. Then, as the unemployment rate went down and leveled out, Bitcoin started to work its way back up. And then it was able to break out here. So this is still more similar to what was going on over here than it is similar to this when it was starting to accelerate quickly, the unemployment rate. So when we think about, what is the most likely outcome for Bitcoin going into the next couple of weeks? I think a lot of it could actually just simply depend on what happens on Friday when we get the unemployment rate. And even even with that, there's some counterexamples, but this is what I would say. I would say if the unemployment rate, we'll just abbreviate it, UN rate, right? If the unemployment rate is equal or less than 4.2%, then that is good for Bitcoin. That's how I would think of it. So if the unemployment rate comes in on Friday at 4.2 or 4.1 or 4, probably a good thing for Bitcoin. If, on the other hand, the unemployment rate comes in at 4.3, then I would argue Bitcoin would probably chop around for another month. Then Bitcoin probably chops until February. Now, what's interesting is that's actually what happened last year, right? Bitcoin chopped until February. And when I say chopped, I mean it could still sweep the high and sweep the low, right? It could always go sweep that high, and then it could come back down and sweep that low, right? So it could do something like that, where it sweeps the high, sweeps the low, and then waits until February on labor market data to then decide what it's going to do. That's the first two options. If the unemployment rate is greater than 4.3%, so let's say it's 4.4, then Bitcoin probably gets a correction. That's what I would guess. And the reason I say all this is just simply due to the fact that there seems like there's somewhat compelling evidence on the chart to suggest that when the unemployment rate goes up every month, Bitcoin gets a correction. When it just kind of does this, where it slowly goes higher, but not really that much higher, Bitcoin generally goes up. And you can see here, as this has sort of come back down, Bitcoin used that opportunity to break out, right? It's not going to wait around forever. The market will give the labor market the chance to say, all right, is it weak or is it strong? If it's strong, Bitcoin goes higher. If it's not strong, then Bitcoin drops. So here's the thing, though. There's an interesting thing to consider with all this stuff, and that is the long end of the yield curve and the dollar, okay? Now, one of the reasons I was so bullish on the dollar, one of the reasons I've been so bullish on the dollar up until around now was because I thought it would just follow the same path it did in 2016, right? As crazy as that sounds, right? I mean, it might sound crazy, but it worked out. And I said it would likely go to 109 to 110. And I said that back at the first rate cut. If you guys remember, when the dollar was back over here, everyone was screaming for the dollar to drop, right? And we said, no, there's probably going to be a rally by the dollar going into the end of the year. The same exact thing happened in 2016. The dollar back then topped out in early January, right? Which is where we are right now, early January. This was January 2017. We're now January of 2025. So this is what I would say. It's kind of how I think about it, right? I would say that there's a good chance the dollar is going to top out this quarter. It could have already topped, right? My thoughts on the dollar was just it goes to 109 to 110, conservative target. Beyond that, I don't really know or care. But I thought it would at least sweep this high, and it has. I don't really care beyond that what it does because I don't really think it's relevant to what I'm interested in at this point in the short term. I think that, I mean, if it goes up, it's going to be a drag on liquidity. But this was the bulk of the move, and that was sort of the important thing to capture. Now, here's the thing. Narrative follows price, right? Narrative follows price, not the other way around. So back over here, when the dollar was all the way down here, you had to think, what would cause the dollar to go up? Right? Why would the dollar go up? I mean, everyone was so bearish on it back in September. What would actually cause the dollar to go from 100 all the way back to 109? And what we talked about back then was that the dollar was highly correlated to the 10-year yield, right? So if you look at the 10-year yield, they were highly correlated to one another, right? If the 10-year yield goes up, the dollar goes up. And so the only way the 10-year yield goes up is if the Fed is potentially cutting a little bit too soon, right? And that's not even necessarily fair because there's always a chance they haven't cut too soon. We just don't know it yet. But if the market is looking around and the Fed's cutting, but the economy is still churning along as it always is, 2 to 3%, annualized GDP, the market might question the Fed's intentions. Like, will that lead to inflation reaccelerating in 2025, just as it did in the 1970s in post-election years? This was actually what happened in the 1970s, right? If you go, and by the way, I like to be thorough, so you're not just taking my word for it. There's always some new people that join in. If you look at inflation year over year, and you go back to the 1970s, you can see that, right here, when it accelerated, it was in 1973, right, which was the post-election year. Over here, if you look at it, it bottomed out in 76, which was an election year, and then it started to accelerate again in 77, right? It moved from 5% all the way back up to 7%. So I think that is sort of the long end of the yield curve trying to accomplish what the Fed is unwilling to, right? And trying to give it a go and say, well, you know what? If the Fed's not going to take care of this, then, let the bond market take care of it. And so when I was looking at the dollar and sort of thinking like, well, why would the dollar go up? I was correlating that to the 10-year yield and saying, well, they're highly correlated. So if I believe the 10-year is going to go up, which I did, then I believe the dollar is going to go up. And the reason to think that the 10-year was going to go up, and if you look at something like, like TLT or something, which is just the inverse, one of the things you'll notice is that oftentimes it'll double bottom, right, or sweep a low, right? It'll do that where it'll, sort of double bottom. Sometimes it'll sweep that prior low. And so the argument was, best case scenario will be that it just kind of sweeps this low. Worst case scenario could be that it actually sweeps that low eventually. But it might just be sweeping this low, okay? So because of this, right, because of the thought process that TLT was going to go back down, then it meant the 10-year was going to go back up. And if the 10-year was going to go back up, then it meant the dollar was going to go back up. And if the 10-year and the dollar are going up, then the implication would be that the economy is holding on just fine, right? And it has, right? I mean, ever since September, the economy has been fine. The unemployment rate has remained relatively low. But again, narrative follows price. So then it raises the question, well, if we're looking at the dollar chart as it relates to Bitcoin, and we're saying, well, what if it tops out in Q1 of 2025, which is exactly when it topped out in 2017 in Q1, right here. You see that? That's when it topped out in 2017. It did not go above the 2017 DXY high for 5 years, right? So if the dollar is to top out in Q1 of 2025, then the implication is that the 10-year yield would likely top out in Q1 of 2025. And if that is the case, then the implication of that would be that the labor market will likely continue to loosen up as the year goes on, which would then incentivize the Fed to end quantitative tightening and go back to everyone's favorite, quantitative easing. But we haven't really seen that transition yet, and the Fed hasn't really given us any insight into when that transition from quantitative tightening to quantitative easing is actually going to occur. One of the reasons you had alt season in 2017 was because the dollar was dropping. And so, the unemployment rate was also dropping. Here, the dollar hasn't really dropped yet, but if the dollar is going to drop, then the way it's going to drop would likely be the labor market starts to loosen up. Therefore, the long end yield curve is not as concerned about inflation returning, and it's more so somewhere in between, right? Like there's the risk of inflation returning, there's also the risk of the labor market loosening up too much. So then I would say this. I would say if the unemployment rate is less than 4.2% or equal to it, I think even if it's 4.2, it's fine, right? 4.2 is probably fine. Equal to or less than 4.2, probably a good thing for Bitcoin in the short term. If it's at 4.3, then I would guess, I don't know, I would guess that Bitcoin might chop until February. And it could involve still sweeping that high and sweeping that low, just like it did last year, right? Where it went up and then it came back down. If it's greater than 4.3, like if it comes in at 4.4, it would likely spook the market, okay? In that case, you would probably get a correction. Now, a correction by Bitcoin can mean a lot of different things. But remember, Bitcoin had a correction in January 2017, and it had a correction in January of 2021. So it wouldn't even be that different from what we normally see, right? I mean, Bitcoin, that's been a common thing for Bitcoin, would be to get a correction in January, the post-halving year. But I think the reason why it's not as obvious this time is because those January corrections that occurred happened after really strong Bitcoin rallies in December. But this December, we didn't really have a Bitcoin rally, right? We had one in November, but then it kind of stalled out in December. And so it's a little bit different than what we saw in prior market cycles. In fact, if you go look at the cycle ROI, like if you just look at ROI from the bottom in 2022 and you compare it to prior cycles, especially if you compare it to the 2016 cycle, you can see that Bitcoin is tracking the last or 2 cycles ago fairly well. But you can also see that there was a correction, in a couple of weeks, right? I mean, we're currently on day 778. There was a correction really starting day 781, but it wasn't really obvious until maybe day 794, right, where Bitcoin dropped a little bit lower than these lows over here before then picking back up. And if you compare it to this last cycle, you can actually see that the current correction that Bitcoin has been in since December lines up really well with the correction it had 4 years ago. So there is one train of thought that would suggest, well, what if Bitcoin's January post-halving year correction just was front-run in December because everyone was sort of more aware that it was coming, and now instead you're sitting right here rather than, at the start of a correction. Just something to consider. The other thing that I want to remind people of is, again, no one has a crystal ball. And I don't know. I mean, I think a lot of it is just like if-then statements, right? Like if the unemployment rate comes in low, it's probably good for Bitcoin. If it comes in 4.3, I would guess Bitcoin's going to chop around. Might sweep the high and sweep the low. Probably chop around until February. If it's higher than 4.3, then you probably get a correction in the market. That's the best way I can think about this right now. Like I think that's what, and I would argue that the reasoning for all this just lies in what we saw happen last year, right? When Bitcoin was dropping, the unemployment rate was going up. When Bitcoin was going up, the unemployment rate was not going up every single month. So you kind of got a glimpse, like right here, as to what Bitcoin does when the unemployment rate goes up. And then here you get a glimpse of what Bitcoin does when the unemployment rate is either going down or trending sideways. Proving, again, that the market does not need a reason to go up. It needs a reason to go down. The market just naturally goes up because that's what the market does. The other thing that is somewhat dubious, right? And I've mentioned it a couple of times. I don't want to sort of overextend its welcome, this part of the analysis on this channel, because I don't really think it's going to play out the exact same way. Obviously, every cycle is somewhat different. So I'll just briefly mention it, and then we probably won't talk about it again for, if ever. Maybe we talk about it again if it actually plays out. But the one thing I would remind people of is that in 1999, the QQQ ETF launched, right here in March, and it rallied from around 48 to 120. And that rally from 48 to 120 took about 54 weeks. 48 to 120. What's really interesting, we've mentioned this, is if you look at Bitcoin's ETF, it launched at around 48K. Now, there are some nuances to it, right? It's a little bit different. I'll explain those in a second. But if you look at the launch of the spot ETF for Bitcoin. Um, it wicked up to 48K instead of down to it like it did with the QQQ. But interestingly enough, 54 weeks later is January 20th, Inauguration Day, which is interesting because 54 weeks after the launch of the QQQ, it was exactly, it was 54 weeks later, the QQQ went from like 48 to 120. Now look at this. If you go to Bitcoin on the daily time frame and you connect this out, you connect these highs here and you just extend that out. What's fascinating is if you grab the sort of a price label and you go over to January 20th and go up to this trend line, it would put you at 120K, which is exactly basically what the QQQ did, right? I mean, it went from 48 to 120, 54 weeks later. And so I just wonder, obviously this is very dubious. And obviously we know the QQQ got a large drop after that, right? I mean, it had a massive drop, and it doesn't really seem prudent to call for something like that, right? Because, if you spend a lot of time calling for that stuff, I mean, it usually just doesn't happen, right? Those sort of things don't happen. The crashes happen when no one's calling for that stuff. So I don't think it makes sense to sit here and say that that's the base case. But what I would be interested in is if Bitcoin finds itself at 120K at some point in a few weeks, what is the reaction there, right? And one potential outcome, and again, basically what happened with the QQQ is after it hit 120, it had a large drop down to 63, which is a pretty big drop. And just to give you an idea, like where 63 would be on this chart, like how much lower that is, that's way down here. And I'm trying to think like when that occurred. It occurred the next month, right? So it occurred 1 month later. So that'd be February, not January, right? So it'd be somewhere over here. So 63 would be right here. Which now that I'm looking at it, right, the reason why that's kind of interesting is if you take these lower highs, kind of lines up, right? Kind of lines up right there. But for me, the reason why I don't really think it makes sense to sort of view this as necessarily the most likely outcome is because it's probably not going to repeat itself exactly. What I would say is this. Keep this scenario in the back of your mind. If on Inauguration Day, Bitcoin's at 120K, and it just seems like it can't possibly get better, right? And then everyone's like, well, hell, are we going to actually get the reserve? Then you might get a correction. But there's also an idea that you do get a correction, but it doesn't actually take you all the way back down here, right? Like it could just do what it did last year, where it sweeps the high and then sweeps the low, right? So like it does that, where it comes up here, sweeps the high, and then comes down here, sweeps this low, and everyone thinks it's going to go back down here, but then it doesn't, and then it just kind of... And I think one of the things to consider is the way that it could do that, the way that it could get a correction off of 120 if it can make it there, would be if, say, the February unemployment rate comes in bad, right? Because if you think about it, the January report is going to be for December of last year. But the February report will be for January of 2025, which will be the first labor market release of 2025. And that's when you get sort of the change in administrations going from, sort of 2024 to 2025. So I would certainly keep that outcome in mind. Doesn't have to happen, but keep it in mind. Right? Keep it in mind. If you see something like this happen, where it is, if the unemployment rate comes in hot Friday, then you might not get that scenario at all. In fact, maybe it would just kind of continue to chop around here for another month, kind of like it did last year. So obviously this is a lot of dubious speculation, and I certainly don't know what the market is going to do. I just want to outline these these different outcomes just so you can kind of think about how this might play out. And again, there's other things to consider as well, and that's like, don't compare Bitcoin to things that happened 25 years ago. Just compare it to what it's doing this cycle. And one of the things to note is that, the main areas of weakness for Bitcoin this cycle have just been in Q3 of each year, right? This is where the weekly RSI came down here, Q3 of 2023, Q3 2024. So perhaps the next main weakness, sustained weakness that'll last for a few months, might not be until Q3 of 2025. But that's still, 6 months from now, right? It's half a year away. So yeah, those are my thoughts, right? Again, it's pure dubious speculation. And as a reminder, I don't know what's going to happen. I don't use this stuff to trade, right? I mean, I stick to the risk levels because I think that's what is going to help me the most. When you take the emotion out of it, when you take your opinion about what's going to happen out of it, and you take all the fear and the FOMO and everything, or you take all that stuff out of it, leave it at the door, leave the crazy price predictions to other people, right? And there's nothing wrong with it, but it's just, let's say, leave it at the door, have a plan, and stick to it, no matter what. And by the way, I mean, as I've said before, over the long haul, being longer term bullish is better than being bearish, right? Over the long haul, because the markets generally trend up. You can occasionally get, things that happen in the market that no one's expecting, like March 2020, right? And so you have to be prepared for those. And even like, July 2015, right? You have to be prepared for those events. I would say right now, the biggest risk for Bitcoin is just like, if the stock market gets a correction. That's probably the biggest risk for Bitcoin right now. And the only reason I say that is if you look at like the S&P divided by M2, it still hasn't been able to take out this high from 1998 where the S&P got a 20% drop. So that would probably be the biggest risk to Bitcoin, is just that the S&P gets a, like a 20% drop or something, kind of like it got at the same level in 1998, which, by the way, this drop back in 1998 occurred, and then the Fed cut rates from 5.5 to 4.75%. Now the Fed's already cut rates from 5.5 to 4.5%. So you could argue that the Fed's trying to get ahead of what happened over here by cutting before it's too late. So I think a lot of people try to fault the Fed for all sorts of things, but they're trying to do the best they can. I think that's what I think. The other thing that I think is interesting is if you look at the S&P divided by the unemployment rate, and we're going to do the unemployment rate squared. If you do this, do you guys recognize this pattern? Because we've talked about this pattern a lot, actually, where you basically have this higher-low structure. You see that pattern? Where, like, it's not really going anywhere. Like, it's still stuck in a range where you have some slightly higher highs and then it turns into lower highs, but the higher lows remain. Do you guys recognize that structure? You should. It's going to be on the quiz tomorrow. It's exactly what ETH Bitcoin did, right? It's exactly what ETH Bitcoin did in 2022. You see what I'm saying? Where you had this higher low structure, you had some highs that led to some higher highs and then to some lower highs, and then you got this scare in the market. That scare right there. So I do wonder, at some point in 2025, you might get that same thing, right? You might see the S&P divided by the unemployment rate squared at some point drop down here. Everyone thinks it's over, and then it just pops back up for another few months, and then it's over for a while. And then you get your typical 2026 bear market. It's a common pattern. This is not the only pattern. We've seen this, right? You can also see the same pattern with Sol Bitcoin. We talked about that previously. I said it would likely break below the wedge by the end of the year, and you can see that it has, right? The higher low structure, and then you get these highs up here that kind of lead to some higher highs for a while, and then they lead to lower highs, and then eventually it breaks down. Same thing, right? Same thing happened with ETH Bitcoin that we just mentioned. Is the same thing happening with the S&P divided by the unemployment rate squared? Who knows? But it's at least an interesting way to think about the market. The other interesting way to think about the market is the S&P divided by M2 divided by the unemployment rate. If you look at that, it's kind of fascinating how this stuff lines up. And I know maybe as humans, we're just trained to see things that aren't really there, but it's just hard not to take this point here and connect the dots. And I mean, it's like, what are the chances, right? What are the chances that it just matches up that perfectly? I don't know. I mean, I get that it's astrology to some degree, but it is kind of an interesting idea, especially when you can kind of take these tops and do the same exact thing. And then you wonder, you know, is this kind of what we've seen before? But I don't want to get too into all that. But you can kind of see what I'm talking about, right? There's this wedge that this thing is in, and it keeps going to the tops and the bottoms, right? And it just kind of keeps chasing the narratives, and it's getting closer and like the volatility is sort of compressing, right, as you go further and further along. At first, it took a long time, and then it's just kind of taking less and less time as time goes on to run between these two extremes of, like, melt up versus crash. And obviously, I mean, if the S&P were to drop back down here, then Bitcoin would have a correction. If it were to drop below it, then Bitcoin would have a larger correction. A lot of times, though, when you break out of a wedge, the first way you break is actually a fake out, and then the real move comes after that. So you could argue that if you break down first, that might actually be a good thing if you can then break back up. If you break up first, it could be actually different. I mean, if you look at Sol ETH, that's a pattern that you can kind of see that same thing where it did both, right? It first broke down from the wedge, and then it broke up, and then now it's back below the wedge. I guess you could argue maybe it's not even a wedge if it keeps going outside of these bounds, but there were so many other data points that sort of connect these higher lows here and these higher highs here. And you can see it went above the wedge, and right as it got above it, then crashed back below it. So these patterns are things we've seen before, right? It's not like it's unique to crypto in any way. But I would say this. I mean, I'd say the dollar's probably going to top out and the 10-year yield will probably top out this quarter. And it could be as early as now, right? But if that's the case, if they do truly top out this quarter, then it means the labor market would probably loosen up even more so relatively soon. If it doesn't loosen up this month for this report, then Bitcoin could still potentially go higher later on this month. If it does start to loosen up this month, then you could get a knee-jerk reaction by the S&P like it did in 1998, and then maybe that would just encourage the Fed to start printing again, and then you see the market go up again. So certainly a lot of things to consider. I do appreciate you guys tuning in. Please subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.